With Jefferies chief market strategist and CNBC contributor David Zervos and RBC Capital Markets head of U.S. equity strategy, Lori Calvasina. Happy Friday to both of you. David, I know you're inclined to think this Trump presidency is going to be very good for the economy and by extension markets. We got to read on what Jay Powell would or wouldn't say about the Trump administration's early days and impacts on the economy. What's your sense of how the Fed is navigating with the administration so far?
My sense is very carefully is the way that Jay approached anything with the word Trump in it when he was questioned for 2 days up on the Hill in the House and Senate. The same way he approached the press conference at the last FOMC meeting. He's holding his cards close to his chest. He's not telling you how he thinks about tariffs or fiscal or dereg or immigration. He's waiting to see how those policies progress. And then I think when we see the actual policies get implemented, he will inform us how the Fed's thinking about that feedback into inflation, growth, and unemployment, and ultimately the Fed's reaction function. So I thought he was very, very much in the same spirit as he's been in the past, which is trying to say as little as possible with regards to the new policies.
Now, Lori, you still feel like the S&P is going to end higher by about, I think, 8% from where we closed today, even though maybe the Fed's done cutting for the year?
We do. I mean, we think that our 6,600 number, it's really driven by the idea of earnings growth supporting this market as opposed to valuation expansion. If we were looking for a big decline in interest rates, say, or inflation from here, and those are not really on the table in our modeling right now, that might give some support for the idea of multiple expansion, but we don't think you're going to get that. I think that, though, our 6,600, it is the path we see higher. We do think it is potentially a rocky path higher. So we still have been warning people. We anticipate a 5 to 10% drawdown at some point. We think our target can absorb that. I do, frankly, John, think that we're a little bit overdue for that.
David, I want to get your thoughts on the fact that we've seen the 10-year Treasury yield actually fall on the week now. We're back below 4.5. We know Bessent, the Treasury Secretary, basically said that this administration is not focused on the federal funds rate and not nearly as focused on what Powell and the Fed do, at least in the near term, that they're focused on bringing that 10-year yield down. So how does that happen, and what matters more to the market here? Is it commentary from the Fed, or is it commentary and policy out of the administration?
I think the 10-year this week, Morgan, was maybe a little bit more technical than other weeks. We saw a lot of people reacting to maybe the deregulatory comments, allowing banks to probably hold more Treasury securities in the future. That was kind of intimated again in Jay's testimony. We saw a very big move in swap spreads. We've seen that. So Treasuries are moving lower more than swaps, as they've kind of underperformed for a while. So I think there's a dereg component to that move. But by and large, I just think if you were in the inflation's coming back, the Fed's going to have to hike, everything's going wrong, Jay's going to lose his credibility camp, it was not a good week for you. You had a pretty hot CPI and the market shrugged it right off. And then, of course, retail sales a little softer. The 10-year took that and ran with it. So I'm still very convinced that we're going to have both a good year in stocks and bonds. We like our risk parity bets a lot. And I think the fact that the administration is putting that emphasis on the 10-year means they will be looking at policies, either regulatory policies or other supply-driven policies with the Treasury market to try to drive those longer-term interest rates lower and get mortgage rates lower, which I think is going to become a bigger and bigger part of the story. You saw in the testimony, Morgan, a lot of people in Congress focused on housing and housing affordability. I think that is going to become, this mortgage rate is going to become a much more important fulcrum point for Scott and the rest of the administration. So watch that space. But I'm optimistic that they can keep pushing the 10-year yields lower, not higher.